A very good evening, everybody. Welcome to the webinar Mapping Our Investment in a Rising Interest Rate and Corporate Default Risk Environment. I'm Ming Hui from Phillip Futures, and speaking to us today will be professional trader Mr. Wong Kon. He'll be discussing how you can use stocks to outperform in this environment of ever-increasing volatility and uncertainty. Before I pass this on to the speaker, please be reminded that if you have any questions throughout the course of the webinar, you can drop them into the questions box and we will answer them during the live Q&A session towards the end. And now, without further ado, let's have Kon Hao speak to us.
All right, thank you, Ming Hui, and thank you all for tuning in today. And I hope that all of you can hear me well. Okay, if there's no complaint, means that we're all good to go. All right, so today we're going to discuss about mapping our investment, especially in this environment, the rising interest rate environment, and as well as possible corporate default. I know everyone's mind is thinking about China Evergrande, but I think China Evergrande is just first one in the list. So along the way, will there be more? Let's take this as a case study tonight as well. And before I go, I just for maybe some of you, this is the first time that you come to connect with me. Maybe just allow me to give you some introduction about myself in the industry for the last 25 years. So 8 years ago, I became a full-time investor and also trade full-time as well. But it was also during that period that I worked with various exchanges, including SGX, Singapore Exchange, and Chicago Mercantile Exchange as well, and also other institutions where they requested me to develop topic, especially in market psychology, behavior science aspects. So that's something that I really enjoy doing. As I prepared materials, I myself also get blessed with the materials I present, because as I present all this material, everything is going to be crystallized, not just for myself, but for my audience that's listening in as well. So for the last 2 years, as my company developed, something that unexpected also spin off within the company, that we also provide expert witness and opinion writing service in assisting the arbitration process for trading dispute. So anyway, so tonight, let me just get to the main topic. But before that, disclaimer is so important that tonight we're going to talk about 3 markets specifically: for the US market, the China market, and of course, Singapore market as well. So now all these views are based on my research, based on my opinion, and based on my personal consumption. So, but I'm just glad and privileged that Phillip Futures invited me to come and share about this topic. So as I share all these information and all this opinion, if somewhat you are being influenced by my thoughts and you get into action, say tomorrow or tonight or next week or even next year, you think about my topic still relevant, that you come up influence and you act on it. So please consult your licensed broker. That is so important to do that. So I thought that to also give you a skeleton that what I will be sharing tonight. So on the first part, there'll be 4 parts in total. Now, the first part, I'm going to talk about the existing risk. Now, the existing risk is, these are the 3 key risks that I think most of us have in our mind that is going to affect the market. Is it going to affect the market? So I'm going to talk about the China Evergrande contagion effect and also the US debt limit. It is not over yet. December will be another round. So then the rising inflation, of course, then the fear of higher interest rate to come. So I'm going to address these 3 issues very quickly. Then after that, I'm going to get into the main topic tonight. I'm going to give you the structure and fundamental of how to map our investment. So as I use it for myself for many years and it works so well. So why is mapping our investment important? Because at any given point, whatever market or stocks that you analyze, that you have to pinpoint exactly where the stock is right now. Is it at the beginning of a growth or at the end stage of the growth? So all these tonight, I think as I shared this structure, I hope the eyes will open, so that after 1 hour sharing, you're able to take this information back, this new skill back, and the way you analyze, I hope, after tonight will not be the same again. So then after that, we're going to go into practical. I'm going to apply what I will be sharing on mapping our investment to the US market, the current market, to the China market, and Singapore market as well. How to apply that, and how do we chart our investment strategies moving forward, especially inflation is rising and especially the interest rate is on the rise. So this is my key topic tonight. So I'm going to showcase how to analyze the three markets. I hope that will prepare you in the near and far future. So of course, part of the program will be Q&A, and I think the session will not be complete not without your submission of your questions. So we look forward to your question. In fact, as I deliver the topic tonight, if you have any questions, just feel free to start submitting your question. And I have Min Hui and Hendrik remotely far away from me. So they will be looking at questions and they will facilitate during the Q&A. Okay, I'm ready to go. And let me just do one last check, make sure everything is good. Okay. Right, let's talk about the existing risks. And these three risks, all these events are not over yet. Now, what do I mean by that is that the China Evergrande contagion effect. Now, so this is China Evergrande chart listed in Hong Kong, and today just resumed trading, so it falls slightly. And we could see that there's a few points that I'd like to mention about China Evergrande. The risk, the contagion effect is not over yet. It is still ongoing. So market watchers are still watching the default on the maturity bonds, so on and so forth. So now, first point is that about China Evergrande is that as things develop, I also study into China government's objective, their role in this episode. So what I understand is that it seems to me that China do not adopt too big to fail policy. That means those companies that is badly managed and lost money, the government will not come in to help. So this is something that we have to understand. So no, government is not helping the failing giants of in China. Now, number two is that as things develop, I could see that the China's priority is to, or the Chinese government priority is to help those households that have handed over deposit and also the Evergrande supply. What do you mean by that? It means that those household, individual, families who have made their down payment for their house, the government will see through this project that make sure that physical home is delivered to them. So they have to protect the people. And also the China Evergrande, the supplier means that, you know, in the construction business, development business, they will deploy supplier to clean their place, to tidy up place, the management company, all these need to be paid. So to me, it's quite clear that the Chinese government have to ensure that all these houses will be delivered, and also these workers, these companies that are associates and suppliers to China Evergrande, they will get their payment. So at least it will not cause social problem within China. So that's what we see. And if you ask me about is the Chinese government going to save the investor, I highly suspect that they will not. Okay, so now unlikely they will rescue the investor and especially the offshore investor. So today I read the news. I posted on my Facebook. I believe is from CNN, if not from CNA. I can't remember. Now, it stated this, which is I think is very useful for those investors that's holding the bonds. Now, China say that they will fully respect and protect the legal rights of the creditors and the asset owners in line with repayment priorities according to the law. So it brought me back to a flashback about high flux in Singapore. That's what is it all about? Is according to the legal rights, whatever payment need to pay, they will pay first. Yeah. So but did our government back then rescue the investor? The answer is not quite, right? So the answer is no. So I think the Chinese government is also heading that direction as well. So that's what I see. Now, so there's on the news that I posted on my Facebook, I think again is from CNN, that I captured this date because there are so many bonds going to expire and which one will affect the market. So I think the key one that I pick up from today's newspaper writing here is that the Evergrande bond due on this date is crucial on 23rd March 2022, which is about 5 months away from now, will officially be in default if they cannot pay certain bonds payments. So do look out for from now till March 23rd, 2022, and things will start to unfold. So China Evergrande story, it is not over yet. So that's something that we have to understand. And the last point is that, from my personal view, is this: I just felt that is Chinese government doing the right thing? I think so, because I think for the last 10 years, when I say, especially in 2016, when I start to invest in China for the first time, invest in their stocks, invest in their unit trusts and funds, um, I got objection from my friends who are their fund managers. They say that no, Konghao, the Chinese company are filled with debts, you know. But of course, when I invest in those companies, I invest in those really good companies, yeah, not those highly debt company. So I felt that yes, over the last many years, a lot of talk about that Chinese companies, how they grow is through debts. But I felt that this is an opportunity for the Chinese government to do a cleanup, because they want to have a clean state, that they want to move forward China, the whole of China, so that those deserve to be filled. They will fill them. That's what I felt. Okay. So I felt that, point number 6, I say that it may be an opportunity for a cleanup in many of its indebted company, especially the public listed one. If not now, then when? You know, so they're doing a massive cleanup right now. But one thing I could see, that they're also trying to make sure that their financial infrastructure is intact, is packed with liquidity, so the event of default, at least, the general public, their safety, their welfare will be taken care of. That's what I see. That's what I feel. That's, as I read, I start to form opinion. So that's based on my personal opinion. Now, so this is about China Evergrande. And next, let's move to the US debt limit. Very interesting here is that I think, for the first time in history, in American history, that never in history that we see there's such a divided Congress between the two parties, the Democrats and Republicans. It's, it's so divided. And so what happened here, that there's 3 points here that I'm going to mention about the US debt limit. So on the 7th of October, finally, the Senate passed a short-term increase to the debt limit, just a short term until December. Now then, on the 9th of October, on this news, that McConnell warned President Joe Biden that he should not be expecting cooperation on rising debt ceiling again, which is coming December. So it's like, um, it, as I read, you know, because I've also invested in Singapore, investing in US market. As I read, I felt that, could, you know, I always have to entertain myself with this thought: could they go into default because of politics? So there is a possibility. And this politicking between the United States is never seen before in United States history. Is so divided within the Congress itself. So that kind of also worries me. Let me just define what is debt limit, because a lot of us do not quite understand what do you mean by debt limit in a for US debt limit. Now, let me just give you a very simple illustration about debt limit. In the first place, for a personal debt limit is something like, my credit card. Say my credit card limit, say for example, is 30,000. Say for example, and on this purchase, this month I spent 30,000 on credit, but I will definitely pay end of the month, right? So now, but I have to purchase another item which costs about 5,000. So I called the bank. I say that, could you increase my credit card limit to another 5,000? So the bank give me 40,000. So I have another $10,000 on credit to spend for this month. So that is on a personal basis, where debt limit and credit card limit, they are quite the same. The only difference is that the credit card limit that we all have is approved by the bank. So there's one layer, right? But for the US itself, the debt limit is like our credit card limit. But what is different is not issued by the banks, it's issued by the Congress, they themselves. So they just set this debt limit so that for them to have a measurement that they do not overspend. So once it's exceeded, which they have exceeded in October, they have to request and agree upon that they're going to increase the debt limit. So this debt limit is a self-imposed thing, which is also good. So there's always a check and balances. Now, so the third point about this debt limit is that, what is the important date to take note of is on the 3rd of December, because the short-term pass increase to debt limit is just short-term. It will still come back again. You still crawl back. So 3rd December and before will be a day that we have to take note of. Where the Congress or the United States will not be able to pay their civil governments. You know, the government will shut down. It ever happened before. So now, 3rd of December, do watch out for these dates. It's important. Senate to decide to pass new debt limit. Now, of course, the most important thing that I'm going to address here is that the rising inflation that is happening not just in the United States but all over the world, especially for last week and this week in Singapore. We felt it. Our few electricity supplier have withdrawn their business, and last week MAS also did an intervention as well, if in case you're not aware. So for the first time, we felt since last week in Singapore, we felt that inflation pressure is kicking in, right? But before that, even right now, the whole world is feeling the inflation pressure. So what I feel that the interest rate were hiked, but I'm not too concerned about the coming hike, but I'm more concerned about the subsequent hike, where I will not describe too much about it tonight, but maybe during the Q&A you can ask me. I will tell you why the subsequent hike is of essence and it is important to take note. Now, about inflation is this. Now, this is the public debt for United States over the last many years, as you could see over the last 4 decades. So having debt is never an issue, but after 1980 and especially after the Lehman crisis, you could see basically the debt increased tremendously. So 2008 marked a year of importance where the US debts have increased tremendously. You can literally see that the chart itself, the gradient is much steeper before 2008. And March 2020, another significant year moving forward, and you could see that the debt increased even more. Now, when we look at chart, I look at the gradient of the curve. The steeper it is, it means that the more desperate measure that the organization is adopting. Seems like the US are there's no turning back, and they have to engage more debts. But it's a good thing. But when they engage debt in the issue of 2008 crisis and also pandemic crisis, it's a good thing because it's necessary. It saved the economy for that time. But as the debt keep on increasing, it will also create another set of problems. Now, so I thought of just give you a simple flow chart for you to keep track moving forward. The flow chart leading to interest rate hike is this. Whenever there's a new debt being issued, it means that in US context is that they have to print US dollars to buy their own debt. That's how it works. Okay. Now, so after you print a lot of US dollars, you'll cause the US dollars to have dilution. Now, when I say dilution, it means that the US dollars will be weakened. Okay? The US dollars will weaken. So when a currency weaken, it will cause inflation to come. Whenever the inflation comes, especially right now, we're feeling that essential commodities are inflated, interest rate were highly likely to pick up quite fast. Okay. Now, so this flow chart, I hope that you enjoy the flow chart. So as the time progresses, you look at how the development unfold, then you look at this flow chart. So it provide us a roadmap what is coming out ahead. Now, so as the US dollars weaken, the essential commodity prices increase. Yes, tremendously. As you could see that just less than 24 months, these are all the essential commodities. When I say talk about cattle, I'm referring to the red meat, the beef that we have. Natural gas, Singapore is big in natural gas. Among the three electric supplier, which is the coal, fossil oil, and natural gas. So we're big on natural gas. And unfortunately, natural gas, the prices have escalated about 3.5 times, less than 24 months. So it's copper and soybean. All these are essential commodity prices. Now, so why? You may ask me that why when US dollars weaken, commodity prices will increase. Now, you have to understand that most of the major essential commodity are priced in US dollars. Now, I don't have time to explain to you, but you just have to understand this, that when a currency weaken, it will cause that currency to, when you say weaken, means that it don't worth as much as before. It means that price increase much more. Okay, the commodity price will increase. So you just have to understand this relationship. When a currency weaken, when commodity price in the currency, it will become more expensive. So that's how it works. And I hope they have another session to describe to you why is that so. Why when a currency weaken, that commodity price in the currency will become more expensive. But you just have to just learn it by heart for this session because there's a lot for me to cover tonight. Oops, sorry. So where I am, okay. So this is the commodity prices that we can see over the last 24 months have increased. Soybean, I'm sure today you have take some soybean product tonight. You know, all these are essential commodity prices. And why the central bank and the government are so worried about inflation right now is because the inflation kicks in and is getting into the essential commodities that we have to purchase it for our livelihood. So now it became there's a lot of pressure, and I felt that the Fed right now are even more pressure to consider to hike the interest rate soon. It may not be this year, but it could be next year. Okay, but I do not think that it's just one hike. It may be a continuous hike to come. Now, just I want to give you a demonstration of the, this is a demonstration over last 100 years, more than 100 years of the interest rate chart that as an investor, I believe in cycle. Cycle helps me a lot. That you could see that before World War II, there was a 20-year cycle, the interest rate moved up and down. And after World War II, the interest rate also moved up for 40 years. And it peaked in 1982. And then it started to slide down until today. The interest rate is almost about 1 or below 1%. Some is 0. So you just have to understand the relationship between interest rate and asset class is opposite. When interest rate drop, asset class pick up. Just like after 1982, when interest rate dropped, the US stock market picked up. Then you say that that didn't happen in Asia. It did happen, just that we Asia investor, we invest in different things. We invest in asset class like properties, right? So in 1982, that when the interest rates start to drop, our property also increased many folds. So yeah. Okay, so I just want to give you this fundamental. We just described about the risk that we're facing. A lot of risk is not over yet. It's still incubating, and it may get worse. But I think my role today is to really help you to navigate through this uncertainty, and definitely from what I'm seeing right now that's developing, that the interest rate is definitely set to rise, and it's not just the coming high I'm concerned, but the subsequent hike. Is it going to be linear or steep? So I'm going to introduce this how to do the mapping for investment, which is very important. Yes, I think I've forgotten to mention one thing at the beginning is that I just want to send my congratulations to Phillip Futures for having this Phillip Nova since beginning of this month. So basically is that Phillip Nova, I think for the first time, that they able to have this multiple assets in one platform. Now, what they mean by multiple assets in one platform for the first time is that, which as an investor and also a trader, I welcome that, is that they could invest in Singapore stocks, Hong Kong stocks, and US stocks in one platform that you may say there's no big deal in it. But there's bigger deal in it is that there's also Forex and futures. If I want to hedge and trade Forex futures, it's all in this multi-assets. But the key is in a single ledger. Now, as an investor and a little bit more sophisticated investor and traders, I welcome that because sometimes I can be investing in stocks, but sometimes I may want to hedge using futures or some Forex hedge, but I have to open an account in different places. But now Phillip Futures, they offer one-stop shop, you know, where I can invest in stocks. In the same time, I may want to deploy futures to trade short-term or to hedge them. But in the same time, I can also trade the Forex all in one platform, which I welcome that. So congratulate Phillip Futures. I hope you will be successful, and I think you will be. So I just want to take for investor to take note that you don't have to be a sophisticated investor to handle a few markets. I would say that times are changing. If you could look a little bit broader, look into China, into Hong Kong, in the US market, and also learn something about how to hedge using derivatives as well. Okay, learn about currency. So just have fun because times like today is never the same as yesterday or 10 years back. 10 years back, you need to be served by a private banker, but today, all these brokers like Phillip Futures, that all these platforms are so easily and readily available to invest in various markets. Anyway, just let me move on to this topic. I'm just excited for Phillip Futures. Now, what is mapping out investment? That is very important for us to do this. Now, most of the stocks or market, they have 4 stages. Now, what are the 4 stages? These are the 4 stages: the income stage, the value stage, the growth stage, and the declining stage. Now, let me repeat here is that most of the market and stocks will go through these 4 stages: income, value, growth, and decline. Now, why is this important? I coined this understanding, and it helps me over many, many years. Now, why is it important here is that, say for example, if I saw a stocks or market right now that I'm quite keen to invest in it. Now, usually I will try to place a dot in this chart. Say, is it right now, is it still income stage or value stage or growth? Now, growth, there's a few stages of growth: at the beginning of the growth, middle of the growth, and towards the end of the growth. So I need to place a dot. If I see an opportunity in a market or stocks, where is it right now? Or is it starting to decline? Or at the end of decline, about to pick up again? So I have to place a dot. Now, when you can place a dot in either of these 4 stages, it will help you tremendously, where it will help you to decide, should I load in more? Should I be a little bit more sensitive because it's nearing the top of the growth? So if it starts to turn, I have to liquidate fast. So if it is at the beginning of the growth, I may consider to buy a little bit more. So all these are very important. Or it just, I'm holding some stock, but I could see that it's entering into a declining stage, then I may want to get out fast. So I hope that that gives you some idea about mapping our investment. Now, let me just define part by part how it works. So later on, we're going to take on the US market, the China market, and Singapore market, at what stage they are in today. Now, I thought to use this example on top growth, but later you'll see that US, China, and Singapore market, they also have these 4 stages. It's so interesting. Now, top growth is wonderful because I think between the Malaysian and Singaporean, we understand, we know about this company, Top Growth. So it's been through these 4 stages. Now, let me just define what is income, not pertaining to Top Growth. It describes general stocks and market. Now, income, I personally define as a stable companies with stable dividends, and I'm not too concerned about market volatility, but I try to buy around the range low if I can. So later I'll give you some example. Then for value stage is that, now before value, let me just describe that not all the companies will go through these 4 stages. Some of the company prefer to be at value stage. They have no desire for growth. Is there a lot of company? Yes, there's a lot of company like Singapore. Singapore, there's a lot of company. They just want to create a business to serve the general public, to create jobs, and also to pay some dividend to investor. They have no desire to take risks and enter the growth, because if you want to go into growth, you have to take some risk. They just want to provide a service. So there's a lot of companies are like that. So you have to identify them, but some of the company will have a desire to go into growth. They want to take risks. They have new plans. Now then, before growth, usually these companies will enter into a phase of value stage. Now, how I define value is very different from how you define value. Okay, so I just have to redefine that things that works for me. I hope that as I share my experience, you will also be blessed as well. Now, how I define value is this. Now, value are not passive. If you're passive, say that I'm a value investor, I want to buy a stock and hold it forever, that's not value, that's income. Okay, so value is that exactly you're seeing value today, expecting it to grow. Therefore, its value is quite acute. Now, how I define value is that companies that are already trading significantly below its fair value. Now, this is second part is very important, as it is entering into its growth stage. Now, so some of the company, when they take risks, there's this what I call the game changer move. They take risks, there's a game changer, but whether they can sustain it or not, that's a separate matter. So we got to continue to keep track on all these companies. So that's the value stage I'm talking about. If they're successful, they may enter into a growth stage. Now, what is growth stage is that how I define growth stage is that the companies that is already trending with strong earnings and growth prospect. So later I'm going to describe to you that growth, there are few stages of growth. So you have to, whenever someone or right now you identify a market, a stock market that you're quite keen to invest, do make this exercise yourself, that you try to put a dot on these 4 stages. Where is it right now? So you'll help us to develop a sense on where's the development, so as to help us to, should we buy a little bit more? Should we be a little bit more careful? Or should we be a little bit more diligent because it may be at the top of the growth, about to enter into a declining stage. Then for declining stage is that how I define it is the companies that's already trending down with disappointing earnings, expecting a weaker growth, or triggered by some unexpected news. So for Top Glove, it was triggered by some unexpected news and followed by a series of unfortunate events. So on this day, where I circled that the factory belongings to Top Glove were found to be a major source of COVID-19 infection in late 2020. And from there, it's just downhill all the way. So you could see that now not all the company will develop into declining stage. Some of the company will continuously get it right. So the growth will be continuous. Okay, but you just got to keep track of if they make some mistake or the market is getting a little bit tired, maybe you saw some divergence, then you just got to be a little bit careful. Yeah, if the P is too off, then maybe you don't buy too many of it. All right, so now we understand about these four stages: income, value, growth, and decline. So I hope that is helpful. So again, let me just illustrate here is that use this if you can. That means moving forward, if you find that there is a reason for you to invest, you try to place a dot. Where is it right now? Is that income stage, value, growth, or is it declining? Okay, so that will be helpful. Now, let me just, because tonight we have about, how many of us we have? I think about 60 of us that is tuning in. Yeah, 60 of us. Okay, can we do this? I think it's a good number to participate in this exercise here. Okay, now you could see that there are this current chart where I put up here. Okay, maybe you can use a chat box if you can. Okay, I give you a few seconds to develop a feel. Okay, to develop a feel. Okay, let me give you a clue here. Every market, the US market, China market, Singapore market, it belongs to either growth, value, or income. Okay, every market, it belongs to one. Okay, now, and that's a very strong clue, right? Now, I want you in the chat box, if maybe you can start off with this Dow Jones first. In your opinion, what do you think? But don't type in first because I do not want your answer to affect the others, okay? Now, you just look closely at Dow Jones and tell me what do you think. So once you make a decision, we start with Dow Jones first. And a count of 3, then you submit your answer. If let's say it's income, you just put I, value, you put V, and growth, you put G. Okay, so none of it may be decline. So if decline, you put D. Now at the count of 3, let's take the Dow Jones first. It'll be nice to understand that because about 60 of us also represents a market, right? So market, you maybe will be surprised to find out how is the market seeing the US market today. Okay, so it's important. I'm trying to develop you to see is this market US? Is it income, value, or growth stage right now? Okay, are you ready? Okay, just prepare your answer. At count of 3, you may submit on the chat group. For US market, is it I, V, G, or D? At the count of 3, okay? Then you submit your answer. 3, 2, 1. Can you submit your answer right now? I'm not too sure if you can see that. Maybe Min Hui, you are.
How you can see the answers in the questions tab.
Oh, in the questions tab. Okay.
Yeah.
Okay. Anyway, maybe Min Hui can give us an update. What do you see generally? People are submitting for US market.
Everyone has
yeah,
responded with growth. Yep.
Yeah, most of you say it's growth. Okay, let's quickly go to China, but please don't submit your answer first. So China is a little bit challenging. Could it be I, V, G, or D? Okay, by count of 3, you submit your answer. So you could see that general people felt that US market is in growth. Let's look at China right now. Back at the count of 3, 3, 2, 1. Please submit your answer for China right now. Now, so China a bit hesitant. I could see that. Some say I, some say V, some say D. Okay, yeah, that's fun, right? Yeah, okay, good. Because this is what I want you to develop a feel so you get a general sense of direction. Where is the main trend? Okay, lastly, let's go to, I could see some D, okay, but most of you say that is I and V. Yeah, okay, let's look at Singapore market right now, okay, but don't submit your answer first. Don't submit your answer. By count of three, there you submit your answer. Singapore market. 3, 2, 1. Okay, go. Submit your answer for. Okay, Singapore a bit less entry, but most of it, I can see that the majority say I, income, income, income. Okay, now let me just review the answer to you right now. Okay, then we'll go through one by one. Okay, for the Dow Jones is growth, but I would classify it as a euphoria growth. Like in growth, there's few stage. For China, is skepticism growth. What is skepticism growth? I'll explain to you how it works. And Singapore is an income stage. Now, very quickly, I'm just going to move on since you understand about I, V, G, and D, right? Some say that China is D, but let's see. Let's see. Now, let's cover about the US market first. Now, the US market over the last, since the beginning of this century, or the last century until 1982, it has been income stage. Income stage means that there's basically no major trend. If I'm going to invest in 1910 and 2005 in 1982, about there, it is still 2005. So it's an income stage. It's something like Singapore market for the last 12 years will be in 2005 and 2006. Hardly moved. There's no major trend. Now, I disagree where a lot of people say that no, Kong Hao, don't worry, when I buy in the US market, it's buy and hold it forever, because look at it, over the last 100 years, that US market has been going up. So has US market been going up over the last 100 years? The answer is no. US market have not been going up over the last 100 years. It only started to go up after 1982. That's where US interest rate peaked and it started to drop. That's why I say the inverse relationship, and US stocks start to pick up until today. Okay, so now you still remember that the 20-year cycle and 40-year cycle in the interest rate chart. Now the 40-year cycle just hit 1982 plus 40, that'll be 1922. But please don't be so rigid that 1922 it must come. You just give us a sense of measurement about this 40-year cycle, that according to the macro development that I just mentioned to you, it kind of matches. So we just got to be very sensitive in months to come and years ahead. What are the trigger that will cause the interest rate to pick up? But you have to understand that as interest rate pick up, the asset class definitely will be much more challenging. Now, then there's a period of value stage. Is that value stage is what I also term it as game changer. Okay, game changer means that what was the game changer for United States from about 2005 to where they are today? It was United States, the currency US dollars became the reserve currency of the world. Where was the story started? It was because of the in early 70s, they went to Saudi and tried to deal with them to let them sell, or they agreed, the Saudi agreed to sell the crude oil in US dollars. And it took a few years for the world to recognize, and there's a demand of oil, and the world began to understand that when they buy crude oil, all the world need oil at the point in time. But it's being transacted in US dollars. So people recognize that, investors recognize that. So at the point in time, it was a game changer. US dollars, there's no timeline when specifically US dollars became the reserve currency of the world, but it's a progression of time. So that was a period in the 80s where the world started to recognize, and it's a game changer for United States, and it became a growth stage, as we could see. Now, something interesting here is that for growth stage, earlier I said that there are few parts of the growth stage. Now, the first part of the growth stage is grow on skepticism. A lot of people say it's growing, but people say, I don't believe that. How can it grow? Just 2008 crisis just over, Lehman crisis just over. How can it grow? People are skeptic over it. Now, when people realize that it's good, then it became matured. Yeah, so this growth became mature. So, and when we analyze the stocks or market, we try, in a growth stage especially, we try to pinpoint at what stage this growth is right now. It will help us to take on more risk, or to divert, to shy away from taking more risk. Okay, now if it's at the beginning of the stage, I don't mind to take a little bit more risk, because the downside is limited and the upside potential is quite substantial. Now, so the last stage of a growth usually is the euphoria growth. So you could see that the US market is in the euphoria growth. I don't have to describe too much. and you know what I'm talking about. So I felt that, am I still investing in US market? The answer is yes. But because of this euphoria growth stage, I'm very sensitive when the market start to turn. I wouldn't hold this strategy to be passive. Means that I want to buy and hold it forever, because I know that for US market is living in a very sensitive time in a euphoria growth. I have to be very sensitive when they start to move south, or before it start to move south. I may want to take profit before that, or even shortly after that. So you just remember, for the growth stage, there are three parts: skepticism stage, maturity stage, and euphoria stage. So that's how to help us recognize. Now, so this China Evergrande actually is a wake-up call for many of us, the market watcher. Now you could see that before 2018, this is China Evergrande chart. Before 2018, we all know that the China market, the companies, a lot of companies, especially the property developers, they borrow loan for expansion. So before 2008, we know that these companies live on loan, they expand, but yet we still continue to invest. So until about 2018, people became more concerned, but people are still investing in it. Some don't care, so they just say continue to hold. The China property market looks great. And only July this year, it started to melt down when there's this fear that they cannot pay the bondholder. They're going to default. Then it triggered in July. So what I'm trying to say here is that so China Evergrande, the debt story is never new. About 2 years ago, or more than 2 years ago, we already knew about it, but we still could see that investors are still buying into it. But sometimes it just need to cause a trigger. So what I'm trying to mention here is that for the US market, it is the same as well. I know there's debt issue, you know there's debt issue, but it always go up because the US have this ability to continue to issue new bonds. But it may not be for long term. So what I'm trying to say here is that if it's become euphoric, the fundamental is not right. Maybe for the time being is that as long as Congress can continue to issue new bills and they could print money to support that, that's fine. But will there be any trigger moving forward? I do not know, but I have to position myself very sensitive. What if there was a trigger? Am I ready for it? So that's something that I just want to give you an advice for you to leave home and take home after this webinar. But I'm not done yet because I still have the China market and Singapore market to talk about. Okay, about the mapping out investment, let's apply to the China market. So yes, most of us are right that you say that US market is in a growth stage, but I think I just introduced you to you about there are three parts in every growth: skepticism stage, maturity stage, and also euphoria stage in most market and most company that I see. So I hope that is helpful to help you to place a dot whenever you come across any investment opportunity. Now, when did I start investing in China? That was July 16. So I posted on my blog. In the same time, I also share on my Facebook page as well. So back then, I just flew back from Hong Kong. I shared to a class of fund managers, and then I share about personally, I felt that, so I give reason, not just technical reason, but fundamental reason. So there are three key reasons that I like China at the point in time. I start investing in China back then. One of the key reasons is that I like the way they deal with corruption. So I know that it's a short-term pain, but it's a long-term good. So I have a lot of Chinese friends that come over to my house for dinner. They complain about presidency, that why do you have to disrupt all this Yanxi and all this and that. But I know what presidency is going after. Yeah, so I think the cleanup is necessary. So I think today, in terms of the corruption, is way better in China. So it's make more conducive for businesses to set up business over there in China. So anyway, that's for you to read about my blog. I think some of it is still relevant even today. Now, these are the three reasons. Let me just explain to you. And what I felt about China today is at a skepticism growth stage. That's how I analyze. Now, it's okay that if you find that, no, I disagree with you, and that's market. It's okay that you can disagree. But allow me to share with you my view about China today. Now, I just came back from a class like I told you when I shared on my blog and my Facebook on 28 July 2016. So before that was in Hong Kong, shared on this opportunity to invest in China. but it wasn't that well received. They say, Connor, how can you tell us to invest in China? But some of the older fund managers, more senior fund managers, they agree with me. So I could see there's two camps as well. The younger one do not agree, but the older one, they agree with me. So, but anyway, it was a great session. And I posted that on my Facebook on 28 July 2016. I felt that the China was at its value stage, just past the value stage, about to enter into a growth stage. Now, let me explain to you the value stage, how I see the value stage. Like what I say, value stage is, you still remember how I define value stage, is that is trading significantly below its fair value as it is about to enter into a growth stage. Now, what I see here on the box up value is this. Then you could see that at the end of 2014, and China opened up their stock market to the world for the first time through Hong Kong. Some of you may remember in November 2014, they started between the two exchanges. One exchange is with Hong Kong, but why I say two, because it's a Hong Kong and Shenzhen connects, and also Hong Kong and Shanghai connects, where you can invest in Shenzhen shares and Shanghai shares through Hong Kong. And Chinese government want to open up to the world for foreign investor to invest in China. So they use Hong Kong, but they never expect that it's so overwhelming. The volume just pump up a lot, and the system cannot handle. Can you see at the value stage at the point in time, it ramp up tremendously. And why it slammed down, it was because the system cannot handle the volume. Then it slammed down. So at the point in time, then it opened up my eyes that, wow, this is how the world investors see China. So I felt that it's a technical fault at the point in time, 28 July 2016. The value stage have just passed. I believe that you have just entered into a growth stage. So I have to really put in a lot of energy and time into focusing on how much I can buy into China. So I did. And what I felt that if I give you a longer perspective, even right now, where should I place a dot in China? I think I'll place it at the point number 2 here. I think it's still on a growth stage, grow on skepticism. So now I know that it's okay that you disagree with me because this is market. Now, so I spend about half hour reading news every day. So what I read about US news on China. I also read about China news on China. So I want to get a sense of balance. And I also want to read about Singapore news about China. So Singapore news about China, I think is the most balanced about China itself. So my view is not too bad. And by the way, I see that how Singapore have invested in China. And just for some information here is that Singapore businesses is the #1 investor in China. So you have to understand that where the money and time being poured in, and that is where the goal is. So I believe that China moving forward, and why are they cleaning up all these companies and industry? It's necessary because they believe that if they do not clean up, they do not get the fundamental right, it will be challenging for their future growth. So they need to set things right again, because when they open up, when they embrace capitalism, they use a ground up approach because they believe in creativity, and it was successful within a very short time. But now they are determined for long-term growth. What they need to do is to clean up the system, clean up the debt, and clean up some of the unethical behavior in the business world. So I felt that they may be doing the right thing, and that's based on my own opinion. So as I look at the macro development, I look at my personal understanding, and when I apply this mapping your investment, when I place a dot, I could buy into China shares with greater confidence. So basically, I have formed a base somewhere in July 2016. Now I'm averaging on my wins. So I want to add on my wins on this recent dip. So this dip is welcome. It became cheaper for me to buy more into China. So that's my standing on China market, because I understand that as I plot a dot in this mapping, I plot it as a growth, but it is in its skepticism stage. So I hope you're enjoying this. Now let's talk about the last one, about Singapore market. If I were to map Singapore market where it is today. So, okay, so since many years ago, I recognize the Singapore market is an income stage. I know that earlier I give you a survey. Most of you say income, so you score. I think your score is absolutely 100%. Now, in April 2018, in fact, I was interviewed by one of the radio channels, so they asked me about Singapore market. Then you could see the STL was at 3,400. So the market, the hosts, they are very excited. So they asked me that, do you think that they'll break 3,004 and head up to 4,000? Because that was the talk back then. But I kind of, as I look back in history and also understand about the constituents of the Singapore stock market, mainly still belongs to the oil industry. And we have a lot of banking stocks. We have a lot of property stocks. We have telco company. All these are old economy. It will not set new trend. The new trend is e-commerce, technology. So old economies, there's attributes to it. It means that when it go up, it won't go up a lot. Neither when it fall, it will not fall great as well. So it became a range. It became an income stage for me to invest in it. Now, so that's what was my view back then. So truly, I was pretty right. After that, it tests about 3,006, and it come back to about 2,200 during the pandemic month. And so this is why I see in STI. And if you understand about the Singapore market, if you understand about the components, is that oil industry, it will not move up a lot, neither will move down a lot. So for Singapore stock, I do not position myself to be a passive investor. It means that I do not buy and hold it forever. Now, most of you, I wouldn't say most of you, most of them outside, okay? So I believe that those tuned in to this webinar tonight are different. Now, those investors outside here is that when they invest in Singapore stock, they apply passive investing. They buy and hold it forever. Now, can you imagine if you buy 2010 at 3,000 and today it's still at 3,000? You'll be mad, okay? But once you understand the concept that no, Singapore market is old economy, it trapped in this range. It's an income stock trapped in this range. But can you see that over the last 12 years, there are 4 cycles. You move up 1,000 points, move down 1,000 points, move up 1,000 points, and move down 1,000 points again. So when it's nearing about 2005, please pick up some stocks. When it's nearing to about 3,005 in months or years ahead, please also liquidate if the fundamental of the composition have not changed. Okay, but if the whole environment we start to see a lot of e-commerce, high-tech company start to get listing, then things may be different. Okay, so if I were to look at Singapore market where we are today, now over the last 12 years, I positioned Singapore as an income stock, and I invest them between these two range, between about 2005 and 3005. So there are few cycles for me to play over the last 12 years. So, but it's never too late if you are passive, but at least we learn something new that it's just a thought, it's just an understanding, then the whole mindset change, because that's the whole thing about sharing, right? So we share information. Now, so for Singapore market, ever, always an income stocks. But I believe that something is changing. I suspect that maybe I'm waiting for us to enter into a value stage. There is a game changer that's coming up, and hopefully we can sustain it. Maybe we can enter into growth. So moving forward for Singapore, I do not mind to just buy and hold for about 3 years, but some I will buy to be passive, expecting a value stage to pick up. Now, there's something changes here is that on the ground, you may agree with me that on the ground itself, there's a survey done by EDP, is that the world top 100 most influential tech company, 80 of them, they establish a headquarter here. So that's something, that's something. Headquarter for Asia, for all these big boys. So you have to understand that all these big boys, no, I do not think they will list in Singapore. Yes, I agree with you. But you have to understand as they are here, they're being served by local supplier, they're being served by local vendors. And I believe all these vendors in some time to come, they will also seek listing in Singapore. I hope they choose Singapore. They will list, they will get listing, all these tech companies will get listed, the smaller companies, but small is never small. They may always grow big, right? So now something have changed that that kind of confirmed my view over the last especially the last 12 months. As I see the actual ground, something have changed, something has shifted. So on 17 September in my Facebook post, I posted an article from CNA. Now, so the government are supporting this initiative. Basically, there's 4 components, but I just want to mention one. So basically, in short, they are trying to attract good listing into Singapore market. Now, these are Singapore government funding. They're going to pump all these finances in tranches, and just the first tranche they're going to pump in about 1.5 billion Sing dollars, and that's huge. And SGX, they themselves don't have the kind of annual net profit, talking about 1.5 billion. That's very helpful to the whole Singapore equity. I hope that this initiative is successful, and I hope that with this initiative, in the near future, you'll see more listing and more quality listing. And I hope that in the near future, more of them will get into the STI constituents, and that will become a game changer. So there's something that I hope that I'm seeing that the ground is developing, but whether the chart will develop to what I want to see, let's put a dot there. If it happened, at least we know that we been through this case study, we talk about this. So once it happened, we became first in the queue to get into the market. Okay, so that's what my hope for Singapore is. And just want to share with you that I have this Telegram weekly case study work group or chat group that I started in January. I invited some friends and some of my followers. I just want to experiment with this. If you understand this concept tonight, then if I were to give you a weekly case study on what I feel that is at its value stage about to get into the growth stage, and if I'm going to not to tell you at what stage, just present you a chart. And if I'm going to do that every Monday or Tuesday, every week I will supply to this group one chart, but in return, I want them to reply me what they see. So over time, I just want to do an experiment whether would they improve in how they read into the market. And to my surprise finding, actually it didn't take much too long. Many of them became better. The new became more experienced, and experience become better because the experience we share information. So okay, one of the I just want to share for Singapore market, I'm looking at the laggard. So why? Because I'm concerned about the US market, because if the US start to drop, Singapore market will also drop as well. But in terms of the magnitude of the downside will be not that drastic. So therefore, it's important that I start to get into the laggards. So on this day, on 13 September, I saw this. I say that I shared to the group, I say Hammer identified has a good weighting. Now for this case study, I just need one word from you, the whole group. Okay, identify if Singtel at this point is in its income, value, or growth. So basically, I just want to trigger something. I do not just want to be one-way track. I supply you my case study, but I want them to, as I supply you, you also contribute. You do your part. Just tell me, is it income, value, growth? Then once you take one step forward, I will take many steps forward. I will start to download my thoughts. So I enjoy the great exchanges that we have in this Telegram chat group over the last 10 months by now. So I could see different ones start to grow. And let me share with you Singtel on the 10th of September. That's why I share. 10th of September, somewhere around 240, 237, it was there. Now, why is it so? Because we could see that Singtel is an income stage. So in income stage, the strategy is to buy around the bottom. Yeah, at the point in time, is there's a lot of inflation, possible interest rate hike talk about. So the market is a bit dicey, but I see that as an opportunity. So 10th of September, it was here. Market was trading at about 237. So within the slightly more than a month today, or even before today, it reached almost close to about 260. That's about 15% gain. So that was a fantastic study, and many of them, they got it as well. So it's a great sharing that we have. Okay, allow me to share one more example on this Telegram weekly case study work group that I have. Now, the next one I share about city development. It is also an income stage stocks around the range low. Yeah, so remember that when you buy the income stage, you do not just buy. If you identify as income and a good stock, you wait for an opportunity that it is around the range low. Okay. Now, so I asked them these two questions. Number one is that, can you please identify if the city development is in its income stage, value, or growth stage? Any significant interest lately? That's question two. Could you identify it and state your observation? So this one a little bit more challenging, right? Now, so 10th of September was here. Was it 10th of September, my sharing? No, it should be 27th of September. Yeah, 27th September. 27 September was here. Then after that, market retraced further, and today is before that it went up, exceed about 750. So that was about 7% gain within slightly more than a month. So this was, I think that Citadel and Singtel is going to continue to trend uptrend, but happened that period we caught around the range low. So all of us are quite happy over it. And but please don't take this as a recommendation. It's really just a case study where I enjoy seeing my friends and followers, we exchange ideas. So I think the best part is that after a while, right, when I test out that experiment on them, once they understand this concept, this principle, then they themselves also share their case study for the rest, and especially of course myself to clarify if he's seeing the right thing or not. Okay, so before I enter the Q&A, I really encourage you that if you can join us in this Telegram weekly case study work group, how you can include yourself to that. I think because of this new initiative of Phillip Nova, they really see value in this case study chat group, how people have grown, how people have exchanged ideas. And how can you include yourself to this Telegram chat group? Is through this program called Timing the Market, Invest and Trade with Greater Precision. Whether you're investor or traders, you'll find this e-program really applicable. So basically, there are two key things that we address in this e-program. The first is to identify the specific stages. So today I give you some brief idea how to look at it, but I think you have learned a lot. I hope so. But the second part, we don't have time to talk about it. On this e-program, I will also address or discuss about identifying the point of entry with precision. Say, for example, like even for income stage, you say, why do you have to have a point of precision entry? It's important, yeah, because we have to find around the range low and where to identify that biting point. So is the value stage, and so is the growth stage, and so is for some traders who like to short the market in the declining stage as well. We are able to identify where is that point of entry of precision. So once you subscribe to this program, I will naturally include you to the Telegram weekly chat group. So give me about once you subscribe, give me about next 2 or 3 hours. I will write email to give you a link how you can include yourself to this chat group. So now this program, this e-program, yes, there's e-program, then you'll also be included to this Telegram case study sharing. Now, both of these will be with unlimited access, and I experimented with it that every week I will show one case study, and I'll say that sometime I will also give reference. You should refer to this chapter 13, chapter 12, so that the whole idea is that I wanted to continuously engage me, or they can continuously engage. We engage each other, right? So as we engage each other, they can also continue to go back to the e-course to re-access the program again, to relearn. So from what I see is that given time, all of them became better. The new became experience, and the experience became even better. Now, so is there a cost to this program? Yes, there's a cost to this program. It's $265 US, but there's a time sales for this program, and I'm very thankful that Phillip Futures support this initiative, where it's not just a program, but it's a continuous program that every week I will showcase you one case study, so you can reference to whether it will work or not in some time to come. Now, so the usual price is about 265, but up to about 8:30, the next 25 minutes, it'll be 198. So there's a 25% discount. And there's a QR code. No, sorry, not QR code. Yeah, you can see the QR code. What you can do is you can scan the QR code, and then the coupon code is 21OCT21. I just realized that today is a very unique date. Do you realize it's 21/21 October? 21 October 21, right? So that's a coupon code. You can do a QR code scan, and if you find that QR code scan, you can't scan it, you can type the address at the bottom, schoolweipedia.com/t/timing the market. Okay, so last of all, I just want to, before I go to Q&A, you can start me your questions. Before the Q&A, you can also follow or like my Facebook page. Is my name Konhao joined together? Why? Because every day I spend about 2 hours reading the news. Then I will inflect upon it. then I will summarize it. I will just post it on my Facebook page. So I just want to share some information, some insight, some market reversal, maybe some trend, some game changer if there is. So I just want to share what I know to my social media page. So if you find that subsequently you want to subscribe to this program, you can always email me, but of course the discount will not be there. Or you want to subscribe to it, but you got some technical issue, you missed the timing, you can email to me as well. By tonight, I will also case to case, I will consider for that discount as well. Okay, so do like and follow my, or not like and follow. YouTube is to subscribe, right? Subscribe my YouTube channel, and please also put a bell on it because I think this topic is fantastic. So what I intend to do is to break down the small pieces and post it on YouTube next month so that everyone can enjoy what do you mean by mapping your investment. So subscribe and put a bell on the YouTube so as I produce a new video, you'll be alerted as well. Okay, so with this program, because Phillip support that is behind, they support this program. They have further promotion as well. Okay, so maybe I just invite this time for Hendrik to talk about Phillip Nova and also what are the additional promotion for this program. Then before I go to Q&A.
All right. Thanks, Kong Hao. Right. I will quickly share the Nova. Right. You all can see, right? For Nova right now, like Kong Hao has shared that we offer not only futures and FX. Now we have stocks as well, right? So we have this promotion for 10 stocks that the minimum fee is only $199. So these are the shares over here. And the commission for the shares, like I think Kong Hao mentioned about Singapore Singtel, is 0.8% and no minimum fee. And lastly, for those who want to try out the demo, you can scan on the left the Phillip Nova demo QR code, right? You can scan and register yourself. And for on the right is the account opening code. And for today's audience who were interested to sign up Kong Hao's course just now, Phillip Futures, we also encourage our audience to learn more about investment. So what we are doing with Kong Hao is that for those who sign up the course with Kong Hao and open an account with us, scan this QR code and deposit $1,000 Sing dollar equivalent and above, and we will actually rebate $100 to your trading account. So in a way, your course or your e-learning fees will get cheaper. So while learning, but you can get cheaper fees to learn from Kong Hao. It's because one is just learning, the other one is this continuous support every week from Telegram. So this is what we like from Kong Hao. So do scan on the right. The QR code on the right is for account opening, online account opening. So and below is our email address, clientsrelation@phillip.com.sg, and our phone number. So if there's any questions, you can let us know regarding the account opening and the promotion itself. So I will hand over back to Ming Hui for Q&A.
Okay, thank you for that, Hendrik. And back to the Q&A with Con Hao. Due to time constraint, let's select maybe just two questions from our audience. The first question is, will banks in US and Singapore go into the 4 stages that you mentioned earlier?
Yes, definitely. Like what I say that most of the banks is a stocks or is an industry, is a market. Most of the, in fact, all the markets will have this, not all the 4 stages, but there's some transition. Now, what happened to the banks here is that I'm not exactly sure at what stage of the growth they are. Maybe they are still in the maturity stage. But you may be asking me why you're interested in banks is that if interest rate were to pick up. So maybe your question is this, right? Yes, we understand that the US market as a whole is in the euphoria stage. And how about the banks? If interest rate pick up, there is a bit different story though. Now, so in the context of the interest rate becomes steep. Now, between a linear interest rate, say in the context that interest rate already start to pick up, But when the interest rate pick up in a very smooth curve means that given time, the market just high about 25 basis point over time. Those are okay because the market, strangely, the business environment is that if given time, it's all about given time. If you hike rate, we will have the ability to adjust to the hike, although it's a higher interest rate. Okay, maybe take lesser loans or whatever. But the concern is that if the inflation is too quick, too strong, then the central bank may have to hike rate much faster than expected. That became steep, right? So when the interest rate became steep, that became a problem. The market, the businesses will not have time to absorb to this sudden hike. Then that will cause business stress. And when business stress comes, and especially those businesses that they are high in their gearing, what is gearing means that they are very high in borrowings. Then when interest rates start to pick up too quick, too much, too strong, they will not be able to stomach this speed, and likely they will go under the water. Now, when we go under the water, then you understand that then banks will also face some problem here. So now you have to understand for the banking sector, the time and seasons matter. Say in a time of recession, where the market about to pick up, that means at the trough, when it's about to pick up, moving to the skepticism growth, and there's an opportunity for maturity, and the road of growth is long ahead. Now, then you'll cause inflation. Those inflation are very healthy. But in the today's context, the inflation is different. There is very skeptical growth, but yet inflation is very high. So there's a risk of stagflation. So risk of stagflation, it became a problem for the banks. Yes, interest rate is high, but the default rate is also very high. So if you ask me about a bank, maybe bank will be still growing, but you got to pick the right bank, because some of the banks are a little bit more risky in nature. They like to take risks. They like to issue a lot of loans over the years. So among the banks they are choosing, whether US bank or local banks, Singapore banks, the three banks that we have, I would prefer to pick the bank that's a little bit conservative. Yeah, over the years. They may not be doing very well, but the conservativity of the loan because they don't want to enter the risk. So just to summarize, in time of uncertainty, the default risk is high. Then the bank sometimes have to absorb all this default risk. But one or two cases is fine. But if let's say together there's a many cases, then that is not good news for the bank. So that's what I have to say. And yeah, okay. Maybe just also let me clarify here is that just now what Hendrik trying to say was once you subscribe to this program, I will include you to the Telegram chat group. I hardly give any discount, so 265. So today is that's 25% to 198 US dollars. And what Hendrik trying to say here is that when you open an account, the Nova futures, no, sorry, the Phillip Nova account is free, right? So once you open an account, they will further credit 100 Sing dollars to your account. Okay, so you don't have to. Yes, there's some deposit of $1,000 deposit, but that's your a margin that you can always withdraw. So yeah, so even though there's no 100 Sing dollars credit, you should go for the 198. So or even after the time have flags at 8:30, right? If you find there's after that you study the curriculum, you find that you like it, please subscribe to it 265, because I really enjoy the Telegram chat group that we have. It's so much like exchanges over there. So I hope that you can participate. Okay, so maybe we can take on the next question that we have.
Yep, sure. The next question is, do you think China is growing too fast with their huge debt?
Growing too fast, in what sense? No, China is not growing too fast. Maybe definitely China is not growing too fast. If you look at the chart that I have earlier, right? Now you have to understand why I purchased in 2016 in July. I start to form a base and I start to invest in China. It's for a very simple reason that China's stock market only started in 1990. That's even later than Singapore and Hong Kong. So Singapore and Hong Kong, our security started in the 80s. So China only started in the 90s. Now, so their stock market is very young. At about 2016, when I first time invest in China, I look at the price. Compared to the 90s, it's not much of a change. But in 2016, not much of a change in price. Yes, there's some growth there, but compared to 90s and 2016, that's about 16 years later. the price is about the same. But back then in 2016, that I'm already doing some online purchase through Taobao. A lot of my home things are manufactured in China, all this and that. So I think that there's a reason for growth. And if you look at the benchmark back then when I purchased at 2016, that was about 9,000. Today, the China index itself is about 16,000 or about there. So no, I do not think that the growth is too fast if you just look at the magnitude. And I would find that, of course, I believe in my mapping, my investment. It works for me over the years. I still believe that it is still in a skepticism growth, where if I talk about growth, people are very skeptical about it. But that's the point, you see. So okay, then you have to look at the different source. Where are the businesses putting their money into? So I just share with you. Recently, I watched an interview with a minister. He said that we Singapore invest the most in China. So that's pretty telling. So my question is, why do you have the investment most in China? I'm with them. Okay, I'm with them. So I hope that this short answer will give you some understanding. So with vocal demonstration, also give you a point between 90s to 2016 and right now where we are. Did it grow very fast? No, the answer is not. Certain companies, individual companies, yes, like China Evergrande, but the index itself as a whole, the blue chip market of China, has it really grown too fast and too quick? The answer is no, not exactly. So I also received another questions personally that I thought that is really good that I can also share with you as well about regarding interest rate for those that are really keen in interest rate, because this topic is tied to interest rate, and I hope that this mapping our investment concept will help you. Now, so this question I received through my personal email, where I felt is really good. So I'll be sharing in a few different sessions already. Now, this question asked me is that if interest rate is higher, that I think it will come, isn't the US dollars will be strengthened? Okay. So earlier I talked about US dollars as they print money, US dollars be weakened, that's caused inflation we are today, right? So I give you the flow chart. Now, so the thing is that your question is about, so Konhao, if the federal hike the interest rate, don't you think that US dollars will be strengthened instead? Now, so you have to understand here is that, yes, the Fed try to use interest rate as a tools to, to hike the interest rate as a tool so that they hope that the US dollars will be strengthened. Now, interest rate, you have to understand, is just a tools. They hope that they will strengthen the US dollar. So that is something like their weapon that they have. They're keeping it right now. Now, my question is that what is they use these tools, which is interest rate, but it failed to stimulate the US dollar strength. Can it happen? Yes, it can happen. So you understand that the dominance in the market is not the interest rate. The dominance of the market is in US dollars. Why? Because a lot of investors, when I say a lot of investors, I'm talking about sovereign wealth fund around the world, they're holding US dollars. So it really depends on the investor sentiment at a point in time. Were even the high rate, but were all these investors buy into it? Do they still have trust and committed to invest in US dollars? Let's say they lost the trust when they start to sell the US dollars. So that's where Fed trying to intervene. But whether they are successful in these tools to intervene to have a high interest rate so as to have a US to be strengthened is yet to know. It really lies on the hand of the global investor. Okay, so it may not work. They hope that work, but the dominance is in the US dollars, where is in the holder of the US dollars. This I'm referring to the US investor or the investor holding the US dollars. Okay, so I think it's a good questions. These are questions that I received. Maybe we just take one last question before we close for the session.
Sure, hang on. Wait. Someone asked why only look at the Dow index in the US? Should you look at SPY or the Nasdaq index as well?
Yes, I would love to examine the S&P, Russell, Nasdaq as well. But of course, with the limitation of time, and you could sense that I'm really trying my best to squeeze in as many as I could. Why I represent down, because I understand that between Singapore and Malaysia investors, the survey shows that we look at down a lot, but in the recent months, I understand that they are looking at the Nasdaq. So I have to choose one to represent. But if you look at the chart on Nasdaq and also S&P and even Russell as well, you're able to see the same behavior on the growth market. And recent weeks, I posted a Facebook blog that all these three markets, that means the S&P, Nasdaq, and Dow Jones, are having a divergence right now, three at the same time together. So that's technically is a concern. That divergence, it represents that it doesn't mean that the bear has arrived. It just means that the bull market is losing its momentum. And lately, I think last week I posted another one. All the big boys, the big tech companies, for the first time in history, are having divergence as well. Okay, since on this topic, let me just share with you the links that I've prepared. Give me a moment. Okay, so these will be the link that I'm going to share. Okay. Okay, just send a few links. What are these links? They are my Facebook page. You can like it or follow it. I have a YouTube link, and also have my Gmail account. So for those that there's some technical issue, want to subscribe to the program and you fail to do so, you can always email me. Then let me also share with you the link in the program as well before we end the session. Okay, I'm unfortunately unable to share the timing the market link, but anyway, you just do a screen capture. I just post this again. Okay, I'm not too sure you can see on the screen. Okay, because of time limitation, I will just extend the promotion a little bit beyond 8:30, because I understand some of you may need some time to register for the program. So I extend the time a little bit more. So Minhui, I just leave this time to you. I could see that most of them are still in the room, so I'm not too sure. Is there more question? I'm okay to go with some more question, but I do not know if Phillip Futures want to find that it's overstretching. So I leave it to you, Minhui.
Yeah, sure. I think we will end tonight's session here. And for the questions we couldn't get to tonight due to the time constraint, we will respond to them via email instead. If that's okay with you, Kon Hao?
I'm fine. Yeah, you're the host.
All right. So thank you, Kon Hao. This was a very insightful session, and thank you very much, everybody, for your time tuning into this webinar tonight. And we'll be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. And that's all for today. Thank you, everyone, and goodbye.
Thank you.